Welcome! In the Proforma tutorial, we covered how to model your expense ratios using high-speed mode and AI assist mode. If you'd like to review those methods, check out the Proforma tutorial linked in the description below. In this tutorial, you'll learn how to use SpeedAlyzer's Expense Estimator. This deep mode method offers a detailed view of the seller's T12 expenses, helps you project year one expenses under your ownership, and maps out operating expenses over the full holding period. The goal is to construct a well-thought-out baseline for calculating reliable expense ratios for your Proforma inputs. The expense estimator also adapts based on the asset type you're analyzing, whether multifamily or self-storage. We'll explore those differences as we walk through the tool. Let's get started. There are 3 ways to navigate to the expense estimator page. First, from the Proforma page, simply click the pencil icon in the expense ratio row. You can also access it from the Proforma button drop-down in the ribbon menu. Lastly, you can get there by clicking the pencil icon next to the seller's T12 expense line on the Deal Inputs page. The expense estimator might look a bit intimidating at first, but I assure you, it's very simple. Let's start by looking at some of the features in the top header. Across the top, you'll see the same returns ticker used throughout the analyzer. If it's turned off, you can enable it from the top of the Deal Inputs page. This ticker provides real-time feedback on key metrics like IRR, AAR, ROI, equity multiple, and DSCR as you work through your inputs. To the right of the ticker, there's a metric displaying expenses per unit for multifamily assets and expenses per square foot for self-storage assets, both calculated from the T12 and year one expense figures listed below. On the left, you'll see a toggle button. We'll go over its function in more detail a little later. To the right of the toggle, there are buttons to add or remove rows from the expense builder table below. Each click adds 5 new rows or removes all unused rows, giving you flexibility to build out your expense list as needed. Next, we have our color-coded goal monitor, the same monitor found throughout SpeedAlyzer, to monitor key metrics in real time as changes are made below. In the top center section, you will find the Add to Proforma buttons. These will be explained in more detail later in the tutorial. And lastly, on the right, you will find the T12 Expense Reconciler tool. This tool displays both the seller's reported T12 expense you entered on the Deal Inputs page and the calculated T12 total from the itemized expense list below. If the two values do not match, you can click the Reconcile button to replace the seller's reported T12 expense on the Deal Inputs page with the calculated total from the T12 expense list below. I'll demonstrate this feature in action a little later. Next, let's take a look at the expense builder. At the top, we have a couple settings. Our first setting is the property management fee percent. This is the percentage of effective gross income that will be paid as compensation to our property manager. Let's input 3% here. Next, we have an optional general inflation setting. This setting can be used in the expense builder below to apply a percentage increase from the seller's T12 expenses to your projected year one operating expenses. We'll cover how to actually use this feature in more detail shortly. As a general guideline, 2 to 3% is typical for self-storage and 3 to 5% for multifamily. For this property, let's go with 3.5%. On the projected expenses side, we can set an annual expense growth rate for the first 5 years of operation. Years 6 through 10 will automatically use the percentage entered for year 5. Let's go ahead and set a flat 3% growth rate for all years. Next, let's take a look at the T12 expense list. This is where you'll enter the seller's reported expenses, as well as any new expenses you anticipate in year 1. For your convenience, the first 7 line items have been pre-filled with the most common expenses. Just enter the dollar amounts. The next 6 rows are available for additional expenses. And if you need more rows, Simply click the Add Row button above to add 5 more rows. Another optional feature is the 2 selectable flat growth rate rows. These can be used for stable expenses that will not increase year after year. When activated, they override the annual expense growth rate settings entered above. We'll see how this feature works in just a moment. With the magic of video editing, I'll input a combination of the seller's reported T12 expenses and add one new expense we expect to start in year 1. We now have a complete list of the seller's T12 expenses, plus our new expense item, security, which we plan to introduce in year 1. We also have a complete table of projected expenses starting with year 1 and extending across our 8-year holding period. Our year 1 expense column is highlighted in green, with each subsequent year increasing based on our flat 3% annual expense growth rate, if applicable. To the left of the year 1 column, there's a per unit expense calculation for year 1. If this were a self-storage property, it would display a per square foot calculation instead. These metrics help gauge whether the expense amount seems reasonable on a per unit or per square foot basis. In the last column on the right, you'll see data bars representing the percentage of effective gross income for each expense. You can base this on either the T12 amounts or the projected year 1 amounts. For example, to view the percentage for property management based on the T12 amount, simply select Use T12 from the dropdown, and the percentage will update accordingly. Lastly, SpeedAlyzer has already calculated the required annual expense ratios for the first 5 years in the Add to Pro Forma section. Next, we're going to fine-tune our year 1 projections, using one of the options found in the drop-down menus within the Y1 options column. Each expense has its own set of options. When selected, SpeedAlyzer will automatically calculate the year 1 amount based on your selection. Some of these options are specific to the type of expense, and we'll cover those as we go. Let's start with the first expense, property management, which the seller reported as $60,195 on their T12 financials. Now let's say we want to carry this expense amount into year 1. Simply click the drop-down and select the Use T12 option. It's the default setting and is already selected. This option simply copies the T12 amount straight across into our year 1 column. So in this case, our year 1 property management expense is set to the same $60,195, matching the T12 amount. The next option in the drop-down is Use 3%. This percentage comes from the property management fee percentage we set above. Let's go ahead and select this option. SpeedAlyzer takes the year 1 effective gross income from the pro forma page and multiplies it by 3%, giving us a year 1 property management expense of $41,254. One important note: for this option, the annual growth rate is based on the effective gross income, not on the expense growth percentage we set above. Next, let's select the override option. When we do, a blue input field appears to the right. This lets us enter a custom amount manually. Let's input $45,000. SpeedAlyzer copies that value to the year 1 column. And unlike the property management percentage option, this option will use the annual expense growth rate we set above. Next, let's select the per unit option. This opens the blue input field on the right, where we can input an average amount per unit for our year 1 property management expense. The maximum amount allowed is $5,000. Let's input $300 per unit here. SpeedAlyzer multiplies $300 by the number of units, in this case 135 units, giving us a year 1 amount of $40,500. If this were a self-storage facility instead, the option would be per square foot, and it would then multiply your per square foot amount by the net rentable square footage you entered on the deal inputs page. This option will use the expense growth rate set above. Next, let's select the new expense option. This tells SpeedAlyzer that this expense is new, meaning it wasn't reported in the seller's T12. When selected, the T12 input field grays out, and the blue input field appears so we can enter a new value for year 1. Let's input $42,000. SpeedAlyzer copied that amount into the year 1 column. Now that we've covered most of the options, let's make a final selection. Use 3% for our final property management year 1 expense option, then move to the next expense item on the list, property tax. There are 2 additional options available for property tax, so let's take a look at those now. The first is an inflationary option. It's currently labeled. Use 3.5% and changes based on the percentage we set above in the set T12 to Y1 increase percent input cell. Let's go ahead and select Use 3.5%. SpeedAlyzer takes the T12 property tax amount of $134,847 and increases it by 3.5%, giving us a year 1 property tax projection of $139,567. Now, if we change the percentage from 3.5% to 3.2%, the option will automatically update to 3.2% everywhere it's selected and recalculate those year 1 amounts. Our second additional option is Calculator. To use this option, let's first open the tax calculator by clicking on the Property Tax Calculator tab. To use the calculator, start by entering the estimated purchase price. In this case, $11,850,000. Next, we'll select the tax method from the drop-down. There are 2 options, rate and millage. Since this property is in Dallas, Texas, we'll use the rate method. SpeedAlyzer automatically configures the calculator inputs accordingly. The market value is pulled directly from the purchase price we just entered. For the assessment rate, let's input 100%, which is typical for commercial and multi-family properties in Dallas. That gives us an assessed value of $11,850,000. For the tax rate, let's input 2.42%, based on recent combined rates in Dallas. Had we selected millage instead of rate from the tax method dropdown, the last 2 fields, millage rate and millage rate basis, would have been enabled. Based on our inputs, SpeedAlyzer calculated an estimated annual property tax of $286,770. Now let's jump back to the expense estimator and apply this result. From the Y1 options column for the property tax category, let's now select Calculator. SpeedAlyzer automatically copies the calculator amount of $286,770 into the year 1 column. We have one more calculator to cover, the payroll calculator. This calculator is available as an option in the drop-down menu for the payroll expense category. Let's open it by clicking on the Payroll Calculator tab. For this example, let's keep things simple. Let's plan on having 2 employees. Employee 1, 1 full-time maintenance technician, and Employee 2, 1 part-time groundskeeper assistant. Let's input a work schedule for both positions. For Employee 1, let's input $22 per hour for their hourly pay and 40 hours for the weekly schedule. For Employee 2, we'll input $15 per hour for their hourly pay and 25 hours for the weekly schedule. We won't include any bonuses for either position. Based on this work schedule, our base payroll total comes out to $65,260. Next, let's factor in taxes and benefits using a fully loaded payroll multiplier. SpeedAlyzer offers 2 multiplier options, 1.25 and 1.4. The 1.25 multiplier accounts for payroll taxes and basic overhead. The 1.4 multiplier adds in the cost of employee benefits such as health insurance. To be conservative, let's select 1.4, which brings our fully loaded payroll total to $91,364. Now, let's jump back to the expense estimator page and apply that result. From the Year 1 Options column for the Payroll category, let's now select Calculator from the drop-down menu. SpeedAlyzer automatically inserted the $91,364 from the Payroll calculator into the Year 1 column. Next, with the magic of video editing, I'll go ahead and complete the rest of our Year 1 options for each expense in our list. Now let's take a look at a few of the options I selected from the Year 1 Options drop-down menu to determine our first year amount for each expense. For example, I selected the inflationary option, Use 3.2% for the utilities expense, which increases the T12 value by 3.2% for the first year under our management. Under Contract Services, I chose the per unit option and entered $150 per unit, which is based on a rule of thumb amount we use for similar properties. I also added a new security expense, selecting the new expense option, and inputting a Year 1 amount of $10,700, again using a comparable property in the area as a reference. For the Repairs and Maintenance category, I selected Override, since we identified some cost-saving opportunities, and entered $45,000 for Year 1. Note that any row I am currently working on is automatically highlighted in yellow, making it easy to keep my place and see the values across each cell in that row. Next, let's now take a look at the two optional flat growth rate rows. For example, say the software licenses expense is under a multi-year contract and isn't expected to increase year over year. Right now, if we look at the projections for that line item, we can see it grows each year by our 3% annual expense growth rate. But if I check the flat growth checkbox, SpeedAlyzer overrides that setting. You'll now see that the Year 1 amount of $5,816 stays flat across the entire hold period. At the bottom of the expense table, the light red row displays our expense totals from the T12 through the full hold period. 8 years in this scenario. Keep in mind that any new expenses, like the security expense we added, won't be included in the T12 total since they weren't part of the seller's original financials. Next, let's take a look at the T12 Expense Reconciler in the top right corner. If you previously entered the seller's T12 expense total on the Deal Inputs page, that amount will appear here, in the Seller Reported T12 cell. In the next cell below, you'll see the calculated T12 total, which reflects the sum of all the T12 expenses from our list below. If these two amounts do not match, as currently shown, both cells will turn yellow and a warning icon appears. This happens when the seller's reported T12 number doesn't line up with the calculated T12 total from the table below. In this case, you can click the Reconcile button to automatically replace the expense total on the Deal Inputs page with the calculated T12 total from here. Once reconciled and the totals match, the cells will turn green, and check marks appear next to each value. Alternatively, if you haven't entered the seller's T12 expense amount and clicked the pencil icon from the Deal Inputs page to calculate it here, the Reconcile button will be replaced by an Update button. Click this button to send your calculated total back to the Deal Inputs page. Now, let's jump to the Deal Inputs page to confirm that our calculated T12 expense total of $556,761 has been applied. And there it is. Let's click the Back button to return to the expense page and continue. And finally, let's go over the Add to Proforma function and the On-Off toggle. Based on our inputs below, SpeedAlyzer has calculated the Year 1 through Year 5 expense ratios, which are displayed in this light green row across the top of the page. You can add any of the individual expense ratios by clicking its respective Add button, or add all 5 ratios at once by clicking the Add All button. To demonstrate this, I'll click on the Add button for the Year 1 expense ratio. A green check mark will appear above the Add button, confirming this action. Now, let's navigate back to the Proforma page to confirm that the expense ratio of 49.4% was added to the year 1 input. And there it is. Next, I'll demonstrate how to add all 5 ratios at once. Let's click the Add All button. As each ratio is sent to the Proforma page, you'll see check marks appear under each ratio. Again, these check marks let you know that the ratio was successfully transferred and matches exactly. Now, let's jump over to the Proforma page and confirm. Our expense ratio row now contains the expense ratios we added from the Expense Estimator page. These green check marks indicate that the ratios match between both pages. Now let's see what happens if we change an input that impacts our ratios. For example, let's change our rental income growth rate from 2.5% to 3%. You'll notice that the green check marks from years 2 through 4 no longer appear. This signals that this change has recalculated the ratios on the Expense Estimator page, and we have to add them again. There are 2 ways to handle this, manually or automatically. The first is called manual mode, where an update button automatically appears whenever a change is made that affects these expense ratios. Simply click this button, and the ratios will automatically update to reflect the recalculated ratios as our green check marks reappear. The second option, which is the preferred method, is called auto mode. Let's go back to the Expense Estimator and go over that method. Remember the toggle button I mentioned earlier? This button, when turned on, will activate auto mode. Let's turn it on. Then go back to the Proforma page to see this feature in action. Currently, there are green check marks under each expense ratio in the expense ratio row. Let's change the 3% rental income growth rate back to our original 2.5% while observing the expense ratio row. Notice how the ratios automatically refresh as green check marks reappear. This will happen anytime you make changes while auto mode is enabled. Let's jump back to the Expense Estimator page. We recommend keeping auto mode turned off until after you've entered all your expense data below. This will speed up your data entry since the ratios won't be continuously recalculating each time you input expense data in the estimator. Once you're ready, just activate auto mode and continue. And finally, a quick glance at our returns ticker and goal monitor shows strong performance across the board. But before we end this tutorial, I'll use a touch of editing magic to quickly switch to a self-storage asset and highlight a couple of key differences. We are now viewing the self-storage version of the same expense list. First, the expenses per unit metrics in the top right ticker now display as expenses per net rentable square foot, which is standard for self-storage. Second, the Year 1 options drop-down menus now include a per square foot option, another common method for projecting Year 1 expenses in self-storage analysis.
We interrupt this tutorial to bring you an update. We've added a new button to the valuation dashboard on the Deal Inputs page. If you're using the Property Tax Calculator option in the Expense Estimator section and you change the offer price here, click the Send to Calculator button to send the new offer price to the calculator's purchase price field. A green check mark will appear when both price values match, so you know your numbers are aligned. This button also prevents any circular calculation issues. Now back to the tutorial.
Well, that wraps up our tutorial on the Expense Estimator page. We trust that our streamlined entry process will accelerate your deal analysis. After all, minutes matter in real estate. Make informed decisions fast with SpeedAlyzer. To view more tutorials, visit our iHeartCRE YouTube channel and subscribe for further insights and updates.